If you asked me where the next great technology fortunes are likely to be built, I would not start with a stock chart. I would start with the infrastructure. That is the first thing most people get wrong. They see a stock run 500%, 800%, 1000%, and they think the move was the story. The move was just the surface. The story was the infrastructure being born underneath it. That is what made NVIDIA so extraordinary. It was not only a stock that went up, it was a company sitting in the path of a computing architecture the world suddenly could not build fast enough. That is what made Palantir so interesting. It was not only a symbol people chased, it was software embedded in a new way governments and enterprises wanted to operate. And that is exactly why I take the quantum computing theme seriously. Not because I think every quantum stock is a miracle, not because I think every chart in this space has to go straight up from here, and not because I think people who missed the first wave should now blindly throw themselves at the second one. I take it seriously because quantum looks increasingly like one of the next foundational layers of global compute infrastructure. And when a foundational layer is being built, the upside for the real winners can be enormous, not guaranteed. Enormous. That is the right word. The source document you gave me had one insight that I think is the most valuable thing in the entire piece. The stocks were not necessarily the mistake. The lack of an exit plan was the mistake. That is an extraordinarily important distinction, because if you do not understand that, you can spend your whole life blaming the wrong thing. You can be right on the theme, right on the technology, right on the direction, and still lose because you had no plan for what to do after the crowd discovered what you already believed. That happens all the time, and it is going to keep happening in quantum. So let us start at the beginning. What is quantum computing really, and why do I think it matters? A classical computer processes information with bits 0 or 1, on or off. Yes or no? That sounds simple, because it is simple. And simplicity is exactly what made the digital age possible. But simplicity also creates limits. When the number of possible states in a problem explodes, classical systems often have to work through the combinations in ways that become painfully slow. Quantum systems are different. They use qubits. And qubits behave according to quantum mechanics rather than ordinary deterministic switching. That does not mean magic. It does not mean your laptop is about to become obsolete. It means that for certain classes of problems, the architecture changes completely. Optimization, simulation, chemistry, materials science, cryptography, certain machine learning tasks. Those are the kinds of domains where the potential becomes very large. The source used a simple analogy that a normal computer reads a book one page at a time, while a quantum computer reads every page at once. That is not technically perfect, but emotionally it points in the right direction. Quantum is not just a faster version of an ordinary machine. It is a different way of approaching certain computational problems. And that difference is why the opportunity can be so large. Now, if that were all we had, I would not be impressed. People have been promising revolutionary technology forever. Most of it never gets commercial teeth. What changes my level of attention is when the proof points, the capital, and the strategic behavior all start lining up. That is what is happening now. Let us start with proof. The source document leaned heavily on Google's Willow chip. That was smart because this is the kind of moment people remember later when they look back and try to identify when the market finally had to admit the field was becoming real. Google said in December 2024 that Willow completed a benchmark computation in under 5 minutes that would have taken a classical supercomputer 10 septillion years, more important than the benchmark number itself. Google also said Willow showed that error rates can improve as systems scale, which is exactly the kind of quantum error correction progress the whole industry has been desperate to prove. That does not mean useful general-purpose quantum computing is suddenly everywhere. It does mean the field crossed another psychological threshold, Sutterturn 525,977 view 6, that matters, because frontier technology is built on psychology just as much as physics. Before proof arrives, capital hesitates. After proof arrives, capital begins to imagine scale. And once capital begins to imagine scale, the whole conversation changes. Now add the next layer, government money. This is where the source was right to treat quantum computing, not as a cute tech story, but as something much more serious. Governments are not behaving as if quantum is optional. They are behaving as if it is strategic infrastructure. McKinsey said in 2026 that governments had committed a cumulative $42 billion to quantum projects as of 2024. BCG continues to project that quantum computing could create $450 billion to $850 billion of economic value by 2040, sustaining a $90 billion to $170 billion market for hardware and software providers. Those are not hobby numbers. That is what serious systems look like when they are positioning early for something they think can matter a great deal. Saturn 525,977 view 4, turn 525,977 view 5. That is one of the strongest signals I know how to read. When governments, major corporations, defense planners, and infrastructure investors all start spending around the same technology, I pay attention. Not because governments are always right, they are not, but because great technology shifts are rarely built by retail enthusiasm. They are built by giant, patient pools of capital that think the stakes are existential. The internet was like that. Semiconductors were like that. Cloud infrastructure was like that. And quantum is starting to look that way too. Now let us add one more proof layer. The field is not only getting money, it is getting better. Much better. Caltech said in March 2026 that researchers had found a significantly more efficient quantum error correction architecture that could allow useful quantum computers to be built with as few as 10,000 qubits, dramatically below earlier expectations. Again, that does not mean the problem is solved. It means one of the most important bottlenecks in the whole field is being attacked from multiple angles. And progress is no longer theoretical in the way it once was. Saturn 211,505 search 0, that is very important, because once error correction starts improving, the whole timeline compresses. And when timelines compress, valuations reprice violently. That is one reason these stocks can move the way they move. Not because retail investors got excited, because the distance between science and business gets shorter. Now let us talk about why this theme is so seductive and so dangerous at the same time. Every major innovation wave has the same shape at the beginning. Nobody cares. Then the smart capital starts moving quietly. Then one or two proof points hit. Then the market gets excited. Then everyone starts confusing possibility with immediacy. Then the stocks detach from the timeline. Then the correction comes. And people who thought the technology was fake at the beginning now think it is fake again because the stocks crashed. That is not how innovation works. The stocks and the technology do not move on the same clock. The source document understood that, and I think that may be the single most useful thing it teaches. The first move is usually the stupid move. It may make a lot of money, but it is still stupid in the sense that it prices the whole dream all at once. Then comes the correction, then comes the separation. Who has revenue, who has real products, who has balance, sheet strength, who has customers, who has the right partnerships, who has the manufacturing strategy, who can survive long enough for the field to mature. That is where more disciplined money starts to care. And I think quantum is now entering more of that phase. Now let us move into the companies, because the source built the whole back half around three names: IonQ, D-Wave, Rigetti. I think that is a very useful trio. Not because they are the only names in quantum, they are not, but because they represent three very different kinds of exposure inside the same theme. Let us start with IonQ. If I were trying to explain to someone why one quantum company is getting taken more seriously by the market than the others, I would start here. IonQ is no longer only a science story. It is a revenue story, and revenue changes everything. IonQ reported $130 million in 2025 annual revenue, up 202% year over year, making it the first quantum company to clear $100 million of annual GAAP revenue. Fourth quarter revenue was $61.9 million, up 429% year over year. It ended the year with $3.3 billion in cash equivalents, and investments. Saturn 525,977 view 2, that is not a toy company. That is a company with a real commercial profile, real financial endurance, and enough cash to shape the field rather than simply react to it. Then came the SkyWater deal. IonQ announced in January 2026 that it was acquiring SkyWater Technology and called the combination the only vertically integrated full-stack quantum platform company. That is a serious strategic move because it extends IonQ beyond simply selling compute access and further into the manufacturing and infrastructure side of the stack. Saturn 525,977 view 3, turn 525,977 view 2. That matters because infrastructure winners often win by owning more of the system than the crowd first realizes. A company that controls more design, more production, more integration, and more customer interface is usually harder to displace than a company living in one narrow corner of the stack. That does not make IonQ cheap. It is not cheap. Anyone who says otherwise is asleep. But expensive and wrong are not the same thing. A stock can be expensive because it is foolishly overhyped. It can also be expensive because the business is clearly ahead of the category. Your job is to know which version you are looking at. Now let us move to D-Wave. This is where the quantum conversation becomes much more nuanced. A lot of investors talk about quantum as if every company is chasing the exact same prize with the exact same hardware and the exact same commercial path. That is not true. D-Wave has a different architecture and a different practical emphasis. Its identity has long been tied more closely to quantum annealing and commercial optimization problems than the gate model future many other firms are chasing. That matters because it changes the type of business you are underwriting. D-Wave reported 2025 revenue of $24.6 million, up 179% year over year, with gross profit up 265%, and it ended the year with more than $884 million in liquidity. It also said that January 2026 bookings alone exceeded $30 million and that first quarter year-to-date bookings had already risen above $32.8 million by late February. Cytoturn 525,977 view 0 turn 558,446 view 1. That is very significant because bookings are what tell you the customer is not only smiling politely, the customer is signing, and signed demand matters more than thematic excitement. D-Wave also brought Advantage 2 into general availability in 2025 and has kept pushing the narrative that its systems can solve certain real-world optimization problems today. Not someday. Cytoturn 428,983 search 14 turn 525,977 view 9. Now, I do not think annealing automatically wins the field. That would be too easy. But I do think a company proving real commercial use in the present deserves attention, while everyone else is still selling mainly the future. That is why D-Wave is interesting. It has actual product, actual deployments, actual booking momentum. That is not the same thing as the winner. But it is much better than being a pure science experiment with a ticker. Now let us move to Rigetti. This is where things get much more uncomfortable and, for exactly that reason, much more potentially rewarding. Rigetti is not the clean commercial story. If you want comfort, you do not start here. This is much closer to a roadmap and execution story, the kind of stock where, if the technical milestones keep landing and the contracts keep coming, the torque can be violent. And if they do not, the pain can be just as violent in the other direction. That is what makes it interesting, and that is what makes it dangerous. Rigetti's 2025 financials are not comforting. Fourth quarter revenue is only $1.9 million, and the business is still losing money. Cytoturn 525,977, view 1 turn 829,264, search 5. But the technology progress is very real. Rigetti reported 99.9% 2-qubit gate fidelity at 28 nanosecond gate speed on a prototype platform, which is precisely the sort of metric that matters when you are trying to convince serious observers that your hardware can scale into something commercially significant. Its filings continue to emphasize that speed plus fidelity plus scale are the path toward quantum advantage. Cytoturn 525,977, view 1 turn 829,264, search 15, and the company has not been idle on the commercial side either. Rigetti announced an approximately $8.4 million order from India's Center for Development of Advanced Computing for a 108-qubit on-premises system scheduled for deployment in the second half of 2026. It also highlighted ecosystem partners including NVIDIA, Quanta Computer, Riverlane, and QP Fox. And Rigetti's 2026 investor deck says that Rigetti and Quanta plan to invest $250 million each over the next 5 years to develop superconducting quantum technologies. Cytoturn 525,977, view 8 turn 558,446 view, 4 turn 558,446 view, 5 turn 525,977. That is not nothing. That is real industrial support, real customer activity, real strategic alignment, not enough to remove the risk, more than enough to justify paying attention. So if I simplify the map, I would say it like this. IonQ is the commercial leader. D-Wave is the differentiated commercial deployment story. Rigetti is the high-risk, high-torque technology execution story. That is not a perfect description. It is the right starting description. Now, let us return to the most important point in the source document. What went wrong for most investors? The stocks went up, the theme worked, the technology remained real, and yet many people still had a miserable experience. Why? Because they had no exit framework. That is the whole answer. They bought because the chart was going vertical. They held because the story still sounded right. They watched life-changing gains appear. They confused having a gain on the screen with having a realized outcome. Then they sat through drawdowns so brutal that even though they might still have been up from the original entry, they felt as if they had been robbed. That is one of the cruelest things about speculative growth themes. They can make you right in such a volatile way that the emotional experience still feels like failure if you never convert some of the paper victory into actual discipline. The source was completely right to hammer on that. If you buy a stock without knowing under what conditions you would trim, reduce, or fully exit, then you are not operating with a plan. You are operating with hope, and hope is not a risk management system. That does not mean everyone needs to trade in and out every week. It does mean that if a stock runs several 100% in a short period, you should at least know in advance what your rules are. Maybe you trim on valuation, maybe you trim on technical breaks, maybe you trim by percentage gain, maybe you scale out, maybe you move your stop rules. There is no single universal template, but there must be a template because I will know it when I see it is just another way of saying my emotions will decide. That is exactly how people turn great stock ideas into bad personal outcomes. Now let us say something that is equally important. The first boom is often not the best opportunity. The first boom is the loud opportunity. There is a difference. The loud opportunity makes everybody feel smart for a while. The better opportunity often appears later, when the field is still real, but the crowd has been punished enough that it stops believing every dream deserves the same multiple. That is where judgment matters more. That is where you begin asking the questions that actually count. Who has the balance sheet? Who has the customer momentum? Who has the technical milestones? Who owns more of the stack? Who can survive another ugly year if the market mood sours again? Who can still raise capital without destroying the cap table? Who is building a business rather than a press release? That is the phase I think quantum is moving into, not the everything quantum goes vertical phase, the separation phase. And the separation phase is where more serious money often gets made, not because it is less risky, because the risk starts becoming more intelligible. Now let us come back to the hook one last time. If you missed Palantir or NVIDIA, is this even bigger? In one sense, I would say yes. Not because quantum stocks must outperform those names. Nobody knows that. But because the compute transition itself may become every bit as important as the themes those stocks rode. This is not just a stock story, it is a stack story. And the world is spending the way the world spends when a stack is being built. Governments, research institutions, defense planners, platform companies, manufacturing partners, cloud infrastructure, everyone is moving. That is what I care about. Not the slogan, the movement, the money, the proof, the build-out. That is why I think quantum deserves very serious attention over the next decade. Not because I think every name in the space is safe. They are not because I think the path will be smooth. It will not. And not because I think you can ignore selling discipline this time, just because the technology is real. You absolutely cannot. I think it deserves attention because it has crossed the line from fantasy to strategic infrastructure. And when something crosses that line, the people who understand both the technology and the market behavior around it gain an enormous advantage over the people who only understand one side. That is the real conclusion. The first wave proved the crowd can get excited. The next wave will prove which businesses actually matter. And that is usually the part of the story where the smartest capital starts paying much closer attention. That is what I am watching now. Not just quantum as a dream, quantum as a maturing industry, and that is a very different thing.